of our participants here today. I'd like to welcome you to the next in a series from the Canadian Business History Association. That's taking a look at the lessons we can learn from the history of many of our important economic sectors. My name is Janet Ecker, and I'm a former Ontario Finance Minister and was also the founding CEO of the Toronto Financial Services Alliance, which was an organization, a public-private partnership all about building Toronto region as an international financial center. So I've had some exposure to our great financial system here in Canada and the banks. And so today, on the 100th anniversary of the Bank Act in Canada, we wanted to talk about our system, uniquely Canadian, the Bank Act and Canadian banking, and you should care, because you should, because this is one of Canada's major industries, one of our major employers, one of our major economic contributors. And we all saw during the global financial crisis what happens when your financial system when Wall Street blows up Main Street, as it were, and here it did not happen in Canada, and there's a reason for that. So here to talk to us about that, and also I should also, before I introduce our two panelists, I should also make a point of thanking National Bank, one of our great banks here in Canada, for sponsoring this event today so that we could all have this conversation. So we appreciate that. So I'm to be your moderator, and I'm joined by two great experts on the industry. First, Joe Martin, who is the founding and current president of the Canadian Business History Association, so well known to all of you out there, I should hope. And also he's the president emeritus of Canada's History Society as well. He was founder and director of the Canadian Business History Program at U of T, at Rotman at U of T, and is also the co-author of the book From Wall Street to Bay Street, The Origins and Evolution of American and Canadian Finance, out in 2018. So Joe has a great grasp on the history of our banking and financial system here in the country. We're also very happy to have with us Dr. James Derrick, who's Associate Professor of Strategic Management, a Director of the Financial Services Program at Schulich School of Business, York University, and he has been focusing on strategic management, governance, enterprise risk, particularly enterprise risk management in financial services. He was is the author of two books, Canadian Banks and Global Competitiveness, and the second book won the Donner Prize in 2018, was Stumbling Giants: Transforming Canada's Banks for the Information Age. I think they objected a bit to being called Stumbling Giants, but it was a good book. And he has one coming out, The Two-Headed Coin, a two-headed coin, unifying strategy and risk in pursuit of performance. So we're very, very happy to be joined by both of these gentlemen, experts in their field, to talk a little bit about the Bank Act, originally in 1871, she said. And what we have, the kind of financial system that we have because of it, and what lessons we can learn. So Joe, I'll turn it over to you to start. And before we do, by the way, I'd just like, if everybody can just keep their cameras off and the mute on, unless you're speaking at some point, and just to sort of make sure we don't use up all our bandwidth here. And we'll also hear from our two panelists, some comments back and forth, some discussion. I may stick my nose in and ask the odd question if needed. I suspect I'm not going to be needed, but we'll be using the chat function at the end of this to allow you in the audience to put your questions to both of these folks. So with no further ado, I think I've done all my moderator duties at the beginning here, so we'll turn it over to Joe to start. Take yourself off mute, Joe. It's our most common comment we make these days. You're on mute. You're still on mute.
Thank you very much, Janet. Sorry about that. And thank you all for attending. It's my great pleasure to sort of kick this off. I'm going to tell you a little bit about how I became interested in the Bank Act, because today is the 150th anniversary of that very important piece of legislation. And I would say it's a piece of legislation that most Canadians have never heard of. This is the Canadian Business History Association is honoring on his birthday. Other organizations will be honoring it later this month and indeed into the fall. And we hope to get some print coverage, because, as you know, the purpose of the Canadian Business History Association is to preserve and to present. There's lots preserved on the Canadian Bank Act, but little presented. Some 20 years ago, I took the initiative to get a business history program started at the Rotman School of Management, which was unusual in Canadian business schools, although Harvard has had such a program since 1928. And I had enough sense to say, pretty important part of business is banking. And I needed some case studies because there weren't any off the shelf that I could get. So I met with Bob McIntosh, the legendary former CEO of the Canadian Bankers Association. And I made an assumption that the students at Rotman would assume that most of our business history was based on American experience. And I wanted to show them that it was not, that it was more than that. And we were having a cup of coffee, and when Bob said, he said, we have an American system based on the writings of Alexander Hamilton. I almost spilled my coffee. That was a surprise to me. But of course, the fact of the matter is the Americans changed their system, where we kept on with the patterns that Hamilton recommended. Hamilton wasn't, you're familiar with the musical, The Room Where It Happened. Hamilton was in the room where it happened in Quebec City in 1864, because Sir John A. Macdonald, who had such a huge role in writing the Constitution, had with him James Madison's copy of the secret proceedings of the 1787 convention in Philadelphia. There were pencil marks to show the parts he wanted, and clearly what he wanted was something strong and national for banking. So with that opening comment, I'll turn it over to my colleague, James Dara, from the Schulich School at York.
Thanks, Joe. As Joe rightly noted, Hamilton was a significant influence on the early history of Canadian banking, because basically Canada and the United States faced the same problems: how to get inward flows of capital and how to create a national system for stability. Unfortunately, Hamilton's experiment failed in the US, whereas in Canada it was very successful, and we created a national pool of retail deposits to enable the growth of the economy. So if you think back from the beginning, the whole setup of the Bank Act was to be national and totally inclusive as one of the important pools of capital. One of Canada's untold stories, on the other hand, is also the life insurance industry, which is another important pool of capital. But again, as many people joke about Canada, it all comes back to the British North America Act, because we had to use the banks to pool capital because the capital markets were left to the provinces. So if we wanted to have a federal influence on national economic development and a new national policy, it was important that the banks be the major players. Joe.
Well, just to give a little context to the time, let's think of what was happening in 1860s when first the fathers met in Charlottetown, Quebec City, and London to devise the British North America Act. It was a challenging time. The British were kind of indifferent to the colony. The Americans posed a threat because they had just completed their Civil War, and in 1865, the Union Army was the biggest army in the world, and that could pose a threat. So the Americans abrogated the Reciprocity Treaty in 1866, the year before Confederation. As far as I know, the only reciprocity treaty in history that they ever abrogated. And the two biggest banks in Ontario disappeared. Bank of Upper Canada, the insolvency, and the Commercial Bank of the Midland District had to be taken over. The Bank of Montreal, under its very aggressive CEO, seemed to be wanting to deny credit to Western farmers. And by Western, I mean Western Ontario. This annoyed William McMaster, who was on the board of directors of the Bank of Montreal, and he resigned and started the Bank of Commerce. And Parliament was meeting to try and get a bank act amidst all this chaos, and not to mention the fact that Nova Scotia was threatening to separate, and there is violence amongst the Métis in the new Prairie West. So that's the context of the time.
And I think what's very important to recognize, once again, is the major divergences between Canada and the United States banking history. Because Canada had the Bank of Montreal, which was in many ways functioning as the national bank. Whereas if you look at Hamilton's creation of the first national bank of the United States, it was performing many government functions. It was much closer to being a central bank, which Canada did not have until 1935. So the paths start diverging quite sharply at that time. Joe?
Thanks, Jim. Well, I'd like to talk a little bit about the Battle of the Bank Acts, because I suspect a lot of Canadians are familiar with the Battle of the Bank Acts in the United States. A great battle between President Andrew Jackson and Nicholas Biddle, the CEO of the Second Bank of the United States. Jackson wanted to get rid of it, and he was successful. We had our own battle in Canada. It was not nearly as long, nor as loud, or as colorful, but the battle was essentially between the Bank of Montreal, who had an extraordinarily aggressive and dynamic CEO, if you like, Edwin King, and the rest of the banks. And the rest of the banks were led, on the one hand, by McMaster, who had founded this new Toronto-based Bank of Commerce, and Mr. Haig, who at that time was the cashier or general manager of the Ontario Bank, which ironically, 30-some years later, was acquired by the Bank of Montreal. The essence of the argument was that people in Ontario didn't trust the Bank of Montreal. They felt it was making money in New York at the cost of Ontario farmers, because it was putting its resources there and starving Ontario. And so this was confirmed when John Rose, the Minister of Finance, a former member of the Board of Directors of the Bank of Montreal, rose in June 1869 in the House of Commons and proposed the first bank bill. Remember, the one we're talking about was the second one. And the one we're talking about got through, but the first one didn't. The impact of that bill, in summary, would have been to make the Bank of Montreal like the Bank of England, a central bank, and a lot of other things. And it would have reduced the rest of the banks, not only in Ontario, but also in Quebec, Nova Scotia, and New Brunswick, to basically county banks without branches. And at that time, I think there were maybe 120 branches of the different banks in Canada. Bank of Montreal would have had 40 of them, but 80 of them were with the other banks. And so those banks did not want to be reduced in status. They brought the pressure of Ontario. The bill was withdrawn. Rose resigned and went to England. King also resigned and eventually left Canada. And so the old cabinet maker, Johnny Macdonald, one more time, had to get a new Minister of Finance, and he went to Sir Francis Hincks, a former co-premier and Minister of Finance of the province of Canada, who was back in Canada, having served a dozen years down in the Caribbean as an imperial administrator. Now, Macdonald chose Hincks very carefully. And the key reason, there were two key reasons. One, he knew that not only had Hincks been premier of the old province, Minister of Finance of the old province, but he had a lot of financial experience in the colonies in the Caribbean. But the other thing, and most, if you look at most history textbooks, they said he was trying to balance the liberal conservative coalition, and there is truth in that. But the real thing he wanted to do was to have somebody who was not associated with Montreal, because the people in Ontario just didn't trust Montreal. And he came forward, he went out, worked very hard, consulted extensively, talked to politicians, newspaper people, the bankers, and he came up with a bill that was proclaimed 150 years ago today. And that bill was very important because it established our framework. One of the things that there were all sorts of provisions around capital requirements, reserves, etc. But what distinguishes it, and my co-author, my late co-author pointed out to me, and Chris was an American who'd done a lot of work in Europe, he had never seen in any other country the provision of the requirement of a decennial review of the bank, and the consequence of the decennial review was you could lose your charter. So people had to take it very seriously. And it was very much a carrot and stick approach, a relationship between the banks on one hand and the people on the other. And that was the basis of the act. James, sorry.
No problem, Joe. As Joe very importantly points out, the banks, our successful banks, were all among Canada's first multinational corporations, because part of their role was to facilitate trade and enable growth in the economy. So from the beginning, under the Bank Act, banking was recognized as a strategic industry. Joe also calls important the decennial review is fundamentally Canadian, as far as I know. I've never seen it anywhere else. And it's absolutely essential, because when we talk about a stable banking system and a somewhat protected banking system, which some bankers may want to argue with, but relatively there's been a lot of protection of the industry. And that's appropriate, because if you want a stable banking system, the banks have to be profitable. Probably, as some of you out there will know, few industries change as rapidly as the financial services industry. If you want to keep in pace with that rapidly changing industry, with rapidly changing demands, it needs to be reviewed on a periodic basis. And I think we'll come back to more of some of the changes later. But from the beginning, the Fathers of Confederation recognized that stability required change. It's not static, but change that creates stability in a rapidly changing world of financial services. Joe?
Thank you, James. And this is sort of going to deal with the point that was raised in one of the papers on Friday. And I think it's a point that James and I disagreed with, and I thought James captured it well. That article criticized the Bank Act. James made the point that the author didn't seem to understand the difference between an individual bank failing and a systematic failure. So I would contend, in spite of all the bank failures, most of whom were taken up by other banks and who had their deposits protected, there was, until the home bank in the 20s, it was relatively stable. Yes, there were a lot of small banks went down, some of them basically for mismanagement. I guess the classic one would be Sovereign in 1910, a Toronto-based bank, which somewhat amusing if you any of you belong to the Empire Club of Toronto, they have digitized their speeches since the beginning, and they've got a 1906 speech from that CEO where he extols the Canadian banking system compared to the American ones. But when the bank went down, he was in Alaska and they couldn't get their hands on him. So as in the 20s review, what happened was that there were starting to be complaints particularly from Western Canada, that the government should move into supervision of the banking system and take it away from the Canadian Bankers Association. And the committee that was doing the review disagreed. And almost immediately after the review, the Home Bank failed, the biggest bank failure in Canadian history to that point, a Toronto-based bank. Originally, their clientele were poor Irish immigrants who came out as a result of the famine, but they'd also expanded into Western Canada. And that was too much. And that resulted in the creation of the Office of the Inspector General of Banks. And as James noted, almost from the beginning, there was a comparable position for life insurance, but it took decades to get one for banking. But as a result of that system, they did. There were no branch inspections, however, and the costs were to be borne by the banks, which is in marked contrast to California, where they continued to inspect a few branches every year and the costs were borne by the state. James?
Yeah, as Joe rightly reminded me, refreshing my memory about, what's important about a stable banking system is not whether there are failures. If you don't have failures, you're not having innovation. The problem is what you do with the failures, which leads us to the resolution of banking failures. Canada's system had most of the failures absorbed by the larger, more successful banks. And by the way, just as a side note, some of you may notice, despite all the complaints about too big to fail in the United States, the bigger banks have gotten bigger as they've absorbed the other failures. Because who else has the knowledge to absorb failing banks but the most sophisticated? What that leads to, and we think about the current oligopoly, which comes out of the discussion that Joe was mentioning in the paper last week, it's the result of the resolutions of many previous failures. One of the great successes of Canada, you think about one of the anomalies is, I believe the Fed was created around 1913. Sorry, memory fails. A very complex structure in the United States. Most countries have to have a central bank because the major cause for bank failures is they lend long and fund short. And that's exactly what you want them to do. That's the nature of risk transformation. But what happens when you have liquidity or solvency problems? Who functions as the lender of last resort? Well, in Canada, it was other banks until 1935 when we created the Bank of Canada. Again, I view this not as Canada being late to the game, but a great testimony to the stability of the banking system. Then we started doing some other revisions of the banking system. And you think about 1954, and just it's interesting. I used to do more history a long time ago, and Joe sort of brought me back to my origins. But if you think about one of the things that the Canadian banks were originally kept out of were residential conventional home mortgages, because in growing countries, land is incredibly risky. In 54, many years, about 70 years after the Bank Act, they're finally allowed into residential home mortgages because now they were seen as relatively secure. The country's at a different state of development. So again, you see the tremendous matching of the Bank Act to the needs of financing in the country. It's just kind of funny talking about it now as the home mortgages are beginning looking like a riskier sector, according to some of the experts in the field. So it's interesting. We keep learning the same lessons. In 1967, I think it's the next major revision of the Bank Act that Joe and I were talking about over the past week. One of the things that comes in 1967 was very important too, which again, as a further testimony, if I look to the United States, creation of deposit insurance. It's not until 1967 that we have deposit insurance. United States, under Roosevelt, I believe 1933, to call the bank panic. Canada did not have those kinds of panics. So again, tremendous testimony to the stability of the system. But 1980 also ushers in a different era of banking in that it creates two classes of banks that were known as Schedule A, Schedule B, were small banks, often not really small because they were the outposts of major banks, but relatively small, allowed you to respond to regional differences. Again, a national system does not preclude there being regional banks. What you're trying to create is a system which, if you have smaller regional banks and they fail, and they're probably likely to fail because their loans are all going to be highly correlated to underlying economic events, what do you do with them? So they limited them. Now, one of the interesting things, I said these were largely commercial banks. They were restricted from very limited role in the retail banking sector, and they were primarily dependent upon wholesale funding, more of which we will hear later. But for those of you who've lived through some of the current financial crises, you realize that wholesale funding and banking can be very problematic, as that even in times of trouble. Joe.
Thanks very much, James. I would, since this is a history program, I would like to bring to your attention that I'm the oldest person on the call. And 59 years ago this month, I sat before, mind you, in the back row, Dana Porter, when he was chairing the hearings, the Royal Commission on Banking and Finance in the legislative buildings in Winnipeg. And he was a very impressive man. And so I think that generally speaking, from the home bank failure to the 80s, things were relatively stable. Yes, there were changes, but the 80s were a tough decade in business. I will never forget that 1983 was the worst year of my commercial life. There was a lot of things going wrong. As a consequence of the Yom Kippur War, oil prices had gone way, way up. And as a consequence of that, you had governments encouraging banks to lend to the less developed countries. So you had the big LDC loans. You had our own oil patch problems. I will only mention one, Dome. Mr. Gallagher said in the speech I was at that he had a bigger Navy than Canada did, and I'm sure that's true. You had massive failures amongst the trust companies, and you had specific failure in Alberta, which James knows better than I, and he'll be talking to that in a minute. But the government had to do something. The Inspector General of Banks, who some people questioned how thorough his inspections had been, was on a month-long cruise and nobody asked him to come home. And they appointed Bud Esty, a Supreme Court judge, to look into the situation. And Bud Esty came up with the notion that what Canada needed was an Office of the Superintendent of Financial Institutions, OSFI, and that is what we have had since in terms of supervision. And personally, I think that was a contributing factor to Canada's performance in the Great Recession of 2008. But James will go deeper on that.
Joe just reminded me of my friend Michael McKenzie, who once remarked that a good crisis shouldn't be wasted. And I think that's what you saw with the Western bank failures. So if you look at the history of the Western bank failures, Canadian Commercial Bank and Northland, and you think about currently, we still have a lot of Western alienation. The problem when you have a national banking system is regions will feel neglected, whether rightly or wrongly. And in most cases, my studies have always indicated that money flows very well inside this system. that it is to the advantage of poorer regions. But if you think about the problem, you have national policies. Just think of interest rates. When you have a stagnant part of the economy, they want low interest rates. When you've got a booming economy, as you often had out west with oil, you get high interest rates. There is no right interest rate for everybody. So there's always going to be some sense of regional conflict. Western farmers, as Joe mentioned earlier, and other Westerners felt neglected by the national banking system. They had some political power. They established these regional banks, Northland and Commercial. Unfortunately, they failed. As Joe once again pointed out, Judge Esty was appointed as a commission to study, Royal Commission to study the failures of these. By the way, that is online if you want to search it out. It makes for very interesting reading for the more historically inclined. And Judge Esty concluded there was no viable business proposition for these banks. When there is no viable business proposition, you are likely making bad loans. And they did. They also were funded commercially. So that's hot money that leaves as soon as there is any hint of trouble. So you have both a solvency crisis and a form of liquidity crisis, and often those two will interact dynamically. In any event, rescue attempts, the classic rescue attempts were made by the authorities to try and put this back together with a more solvent bank. I believe it was National Bank, our sponsors for today. So they probably don't like hearing about that episode in their past, but they rightfully inspected and said, we're not doing this. There was nowhere else to turn. So the classic Canadian failure resolution mechanism failed. That's what made this a crisis. The tremendous emphasis on stability in the Canadian system is shown by the reaction to creating a Royal Commission for two banks that, under any metric, represented less than 1% of the total assets of the system. In other words, it's a whole lot of nothing. It's like one of the small banks in the United States that failed that we don't even hear about. That was this affair, except it left lasting scars because of the impact of instability. And again, as Joe alluded to, the government did not behave well. They assured people that the money would be there. So despite the fact they had deposit insurance, which one of my regulatory friends said, the reason you have deposit insurance is to limit your losses, not to actually cover deposits. The government decided they had to make all depositors whole because they had mismanaged the entire affair. If you go back to what Joe correctly was stating, when you change the bank system, as they did with Schedule Bs, you really need to also change the regulatory framework. The old structure where you could use moral suasion with a few bankers and everyone knows what is going on was no longer pertaining. So we'd outgrown that structure. And Joe rightfully mentioned the Harvard Business Program. And I just want to play honor to one of my heroes, Al Chandler, who was the founder of that business history program. And that's why history is important, and I think why Joe is Canadian Business Association is doing a lot of very, very good work. But this is transformative for Canada because our system didn't work in this instance. Yielded to regional pressures, political pressures that were inappropriate. And so it failed. If you think about that, those failures, lasting impact. Even when I started my work now, 25 years, I'm not going to compete with Joe on age, but a long time ago, the scars in Ottawa on policymakers were still quite evident from those failures. And having talked to a number of people. So if you think about that, problem of wholesale funding, which, by the way, if you think about the current regulatory structure, you now have liquidity coverage ratios. I don't want to get into the complexity, so I do more work on risk now, but that structure of wholesale funding is viewed as very unstable. So we had to move away from that. If you think about that, the next change you really, I think, see in Canada, Joe wants to correct me, was in 1987, you have the first Basel Concord Act, which tries to regulate international banking, create a level playing field. Now, this was of interest to me. This is actually where my doctoral thesis started, because although Joe and I haven't really mentioned this before, Canada's banks were all international from the beginning, because their role was to facilitate trade and facilitate inward flows of capital. So the banks were largely multinational. But in 1987, and this is when I first, shortly thereafter, I started working with some risk departments. When you created a level playing field, you started putting in what are known as risk weights. And with risk weights, it encouraged Canadian banks to become less international and more focused on the domestic market. It was, but if you talk to bankers, it was capital efficient. And if you look now at the portfolio, and I guess TD would be one of the leading examples. TD Bank is about 88% retail, largely a domestic bank. RBC still has significant international capital division. But if you look at the total portfolio of the banks, far more domestically focused than they've ever been, which I think in some ways makes the Bank Act a little bit less relevant for us than it was in the past. If you look at some of the negative effects of Basel with risk weights, it makes certain kinds of business very unattractive, I should say, and other kinds very attractive. So if you're following the current housing problem, you notice that CMHC insured mortgages have a zero risk weighting. So they are very profitable line of business done on a volume basis. But what effectively happened, and this has come out from the IMF, you've transferred risk from the banks to the government. But what I'm really focused on is the change in bank portfolios. So if you think about now, the banks are domestic, they're also very retail focused and North American focused. Because of integration, at least until Trump, the integration of the United States and Canada was fairly significant. May not be as strong as it once was. So I think we're under Basel 1, 2, and 3, we're in a new era of trying to understand what creates bank stability. And some of that's been, I think, taken away from the Bank Act, but is enshrined in OSFI, as Joe rightly sees how these two are complementary efforts. In fact, OSFI has been among the leaders in promoting international standards at Basel, even if some of the things have not been, I think, truly favorable to the Canadian banks. But they have opted, as one of my banking friends said, OSFI prior to the financial crisis wanted to be the gold standard. Post-financial crisis, they want to be the platinum standard. So again, the tremendous Canadian public policy concern with stability. But if I'm looking, this initially what Joe had, I think, approached me because I was more on the future of banking than the past, but I had done a lot of work on the past of banking. But I think if you're looking at the tremendous waves of change now, then you're really looking at the emergence of platforms and ecosystems in banking. The challenge of Apple, the challenge of Amazon. For those of you who are following some international events, recent events in China with Ant Pay and everything, Amazon could do some of the things very similar to Alibaba. The banks are somewhat stuck in the past, according to my co-author Pat and I don't think the banks agree with me, by the way, but they're stuck in a fascinating trap. They're incredibly profitable. There are few industries as profitable as Canadian retail banking. So they're not. And if you go back to Al Chandler, organizations don't change until they feel pressure to change. There's very little pressure being put on the banks except by critics such as Pat and I, and we're not the customers that are forcing them to change. So we live with the status quo. But what will be changing is important, because I think, and I think Joe's work, historical work, has really brought this home. It's not just the Bank Act, but it's a lot of associated acts, such as the Payments Act and things like that. And it's payments which are changing, and possibly changing dramatically. So if I look at the banks, and had a number of discussions with people, if I look at the future, there's different scenarios, and some much more positive than others. If you look at Direct Banks, which was ING Canada. I'm thinking now Tangerine, which was purchased by Bank of Nova Scotia. If you look at Tangerine's approval ratings, according to JD Power, are higher than any of the big 5 traditional retail banks. People like their offering. It's lower cost, it's more profitable to run. So one of the questions is, will the major banks all establish direct banks and hollow out the old bank as they rebuild their platform, rather than the cost of reorganizing? Second alternative, maybe with cloud computing, core transformation will become significantly cheaper. I don't know, but it's bolt on, hollow out. And then I think there's the other possible transformation is, will new entrants change the business? I mean, if you think about Amazon with its direct lending program, Amazon sitting on fulfillment, they can monitor the working capital needs of small business better than any bank I know and do it real time. Could be a very significant change. How many people are going to start using credit accounts via Amazon, Facebook, whatever? So the banks certainly have the money to respond. The question is when, and I think they certainly have the intelligence. They're well aware of these issues, by the way. It's not as if, it's not a question, the question is, when will it become profitable to engage in change? But the forces, the things that used to, I think, drive instability in the banking system are not the same as they are now. So I think, as much as we weathered the financial crisis because of our national banking system, and I would hasten to add, by the way, that no bank I know outside of Washington Mutual that have the same retail commercial structure of loans and deposits failed. The 2007-8 was a failure in the investment banking side of the industry, not the retail domestic side. So our structure, again, was exactly correct for the times. And we may be slow to change, and we may not be as innovative as I would like, but innovation comes at a price and stability comes at a price. And that's why we pay our public policy people like Janet. Joe, back to you. I feel like I went on too long.
Ready to Janet and take the questions.
There we go, off mute. Thank you very much to both of you for a great travel log from the past to the current, to the present in our banking industry here in Canada. I'd encourage all of you in the audience who have some questions for our panelists to please use the chat function. And Tabitha Fritz from the association will help me make sure I don't miss anybody there. So please put a question in if you have one for our panelists. Just while somebody's putting one in, but it's not complete. It says, should the definition of banking, and I think they're talking about, should we be changing the definition of banking, or what is the definition of banking? Because of course the credit unions have been having a bit of an argument about that. James, what do you think?
I believe the original Banking Act defined banking as what banks do.
Yeah.
We have never defined it. So I think that's what gave you the flexibility for the decennial reviews. I think where banking is changing, I think if you look at much more direct financing, the importance of investment banking, but you're still dealing with the small business problem. That's to me, one of the sad things about the fallout from Basel. If you look at what drives the Mittelstand in Germany, which really drives their economy, they've been very detrimentally affected by some of the Basel rules on financing because there are subsidies granted to the Landesbank, which declared as inappropriate. So I think we really have to come to grips with financing small and medium-sized business. I think that's what pressing need for the banking system in almost every country.
Okay, and they just clarified that they wanted to ask about how banks were responding to cryptocurrency pressures and the cryptocurrency issue. So do you want Joe or James, who wants to take a shot at that?
They want. I'm not clear as to what they're
How
question is-
are the banks responding to the new cryptocurrencies that are out there? And if you read some of the media, I mean, it looks like certain people are making gazillions of dollars speculating in cryptocurrency, if you can remember your password to access your account. So how do you, James, is that something that you've been dealing with when you've been looking at how the banks are adapting?
I've tried to avoid it because it's one of the things I don't understand. I think in the general debate is you've got such volatility in the cryptocurrencies that you really, if you think about on a balance sheet, if you're holding cash and cash equivalents, it's hard to see cryptocurrency like that. It's behaving more like a marketable instrument. So I think will they come to deal with it in terms of settlement? I think they will. I think the debate we're really waiting to see is when are the central banks going to move to digital currencies? And that you keep seeing position papers. That has a lot of people. But I can't see the government's giving up on the right to print currency and have everything too much underground. So I think it'll be important, but it'll be an important activity. How marginal, I don't know.
Yeah. Should the federal legislation, banking legislation, seek to bring the Amazons and the others under federal jurisdiction?
Why?
Okay.
Health and safety, consumer protection, but they're not.
Yeah.
I mean, if you look at banking, which is covered by prudential regulation, it's all about depositor safety. Amazon doesn't take deposits. Leave them alone.
Yeah, and if and when they do, we should respond.
We should respond. Well, I mean, look at that. Walmart's been trying to get into the bank in the United States forever.
Yeah.
And keeps getting blocked by regional banks. But that's saying, you think of the heart of OSFI, because OSFI's never, and maybe Joe will disagree with me, OSFI's never been very big on consumer protection. That's the FCAC, which I doubt many people have even heard of. And it's always struck me when I've been in the UK, and you see these ads about mortgages and all the caveats, whereas in Canada, we have very little of this. Consumer protection has not been a big thing in the US. I'm not sure whether it should be. I'm not arguing for it. I'm just saying it's different.
Here we got another question. The writer says, my impression was that Canadian banks made large profits from a relatively uncompetitive environment, and this was the trade-off they enjoyed for not engaging in investment banking to the same extent as US banks. So I guess I just added a little bit here. I mean, is that a fair assessment? And also, do Canadians pay too much for their banking here?
Well, the most recent American study I have seen, which compares the US and Canada, and it's in the book Fragile by Design by two American authors, they claim that Canadians on balance receive more on their deposits in terms of interest and charge the borrower less, i.e. the spread is narrower. But James, you would have, I suspect, more knowledge than I would on that one.
Yeah, I think that's basically basically true. I think the question of investment banking is a little bit more problematic because the Canadian banks were allowed in investment banking in 1987 with the little bank. And I think if you actually follow the history, Joe was alluding to it earlier with international finance, when companies started shifting more to direct financing and away from banks, it has two important consequences, one of which we saw leading up to the Depression. First of all, your most creditworthy customers are either going to squeeze the bank on rates or they're going to finance via bonds. One impact of that is the overall creditworthiness of your prime customers is actually going down because you have fewer of them in your portfolio. We saw that, by the way, in the Depression in Ben Bernanke's work. But you also need to be into those activities because that's what's driving profitability now. So the Canadian banks were all allowed into investment banking in 1987, well before Glass-Steagall was failed in the United States. So it's, I think, a more complicated, but I think the difference between having national capital markets and regional capital markets is a more profound problem in Canada. You just have not had the same pooling of capital as you have in the United States. And I think that's why you get much more innovation in the United States. It's via the capital market side where failures happen.
Yeah.
And the systems generally have been able to deal with them.
Yeah. So speaking of the United States, we have another member who's saying that says you praise the rule that banks lose their charters if Parliament doesn't act on the decennial revision. My US friends are horrified by this, that one party or the other could someday use the rule to blackmail. Isn't this a dangerous rule? And guess when we're looking at what happens in the United States, you can understand why someone might be a little paranoid about that for sure. We've never had that happen here in Canada, I don't think. But Joe and James, what do you think of that? Comments?
I'll defer to Joe.
Go ahead, Joe.
Oh, you can take that one.
Let me, as a former politician, just say that the political folks play with the bank system very, 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 very carefully, because they don't want to upset the apple cart, because they quite recognize, even though there's certainly have been issues over the past, Canadians like that stability. They really, really do. And as we saw during 2007, 8, 9, 10, there was a value to that. I mean, when your banking system falls apart or stops working the way it is, your whole economy, people's lives, I mean, it's a serious, serious disruption to the country. So they do tend to be very, very careful when they start playing around with that particular policy area.
And to reinforce what Janet is saying, if you look at public opinion polls like Harris RQ in the United States, financial institutions are not very popular and haven't been very popular for a long time. There are some exceptions, but not very popular. In Canada, most popularity polls of the banks show them to be relatively popular, which is also has a great deal of brand loyalty, very little movement in the market, very hard to shift market share. But you're right, it's an oligopolies. If you want a stable system, you want people to be profitable.
Yeah, that's true.
And that leads to oligopoly. It may, whether it's an intended consequence or an unintended consequence of regulation, I don't know. But it certainly is, as one regulator said to me one night about bank profitability, well, I like to sleep well at night.
Yeah.
Well, Janet,
Profitable banks let you sleep.
Janet, the anecdotal evidence I would present is I came to Toronto from Winnipeg many years ago, but I still have a lot of friends there. And one of them was in partnership with Jack Nicklaus on his course down in near Naples. And I was a little bit surprised. And I was talking to him over cocktails one night, like, how did this happen? Guy from Winnipeg handling that kind of a transaction. He just said, Joe, he said, Nicholas's partner was not very good at finances. Their New York bank, they all love the Canadian banks because the Canadian banks have got so much solidity, and they like the Canadian real estate developers, and it wasn't even a contest. So he said, we had no problem getting the business. And I think that's a side that you don't hear that much about.
Okay, we're getting down to the end here. We've got two questions here. That one is asking about, do you agree that banking is a digital game with too many people on the payroll? And the second question is about, you noted that mortgages have zero risk weight, generate good profits. Is it equitable for the large profitable businesses to have their risks taken by the government? And does that reduce credit availability for business and entrepreneurs? So I'll let Joe and James comment on one or both of those questions, and that will be, I think, the end of the questions that we're able to take from the audience in order to keep our time. So Joe and James, who wants to start with that?
Well, personally, I do think insured mortgages are playing too large a part in the bank portfolios. And I don't understand why government wants to take on that risk. It's not just me, that's the IMF. Neglect of small business may be related to that, but it's also related to the problem of having appropriate credit assessment. There are skills which I think are declining the bank. As to it being a digital game, I think you're absolutely right. I think if we're looking for the next transition and look at robo-advisors, but you already have, for major corporations, you have KMV. Like, we can use artificial intelligence to increase scoring. In my book, in our book, Stumbling Giants, I looked at trying how to securitize small business loans using AI by creating tranches. So I think there will be I don't know how much of a job reduction there will be, but there'll be certainly a change in what the jobs are. At the moment, my thinking is more, radio didn't kill television, but it changed what radio did.
Yeah.
And now the internet is changing how we're using television, right? Whether there's a total loss, we'll see. I think new jobs will be created as jobs will lost. Transition, yes. How painful? I hope not too, but I don't know.
Well, I know in the Toronto region, when I was running the Financial Association, that was, as more and more digital, was coming on stream. That was the big concern, is that all those wonderful, good jobs were going to disappear. But as I think you've said, and as I think so far has been proving, is that some kinds of jobs disappear, but it's creating other kinds of jobs. So hopefully,
I noticed in a number of Zoom meetings with my colleagues, I'm the only one with an office that has no books.
Yeah.
I don't know if that's good or bad, by the way. I just noticed it.
Yeah. Well, no, those are all the paid backgrounds you get now. Sort of your craft, your screen presence. So, listen, I'd like to a special thank you to Joe and James. I think the depth of their knowledge is very, very evident in the work and that they have done. I look forward to reactions to any upcoming books and articles that they're putting out there to create some good discussion around some very important topics for all Canadians, as well as our economy. So very much thank Joe and James for this. Certainly thank the National Bank, who was brave enough to sponsor this, one of our big 6 banks in Canada. So thank you very much to them. And also obviously to the Canadian Business Association. As I mentioned earlier, this is one in a series that they've been doing on basically lessons we're learning from the history of our major sectors here in Canada. In May, they're going to be looking at big oil, big auto, and antitrust, history's lessons for big tech. And then on June the 16th, they're going to be looking at lessons learned on Bay Street. The sale begins when the customer says no. So both of those look to be quite interesting and fascinating topics, as this has been. So thank you all to the audience for your questions and your interest in this. And I wish you all the best. And as we like to say in certain quarters, stay positive, test negative. All the best.